Welcome to Financial Ratios Introduction. By the end of this ACLET, you should be able to locate financial statement data used in ratios to assess a company's liquidity, leverage, and profitability. By the time you're using this ACLET, you probably already know how much time and effort go into preparing financial statements for a company. And you may recall that the reason that we invest the time and effort to prepare financial statements is so that we can tell how well or poorly a company is doing. We'll take a minute to review two of the four financial statements, the income statement and the balance sheet. The income statement is where we report all of our revenues and expenses. The difference between total revenues and total expenses is net income or net loss if our expenses exceeded our earnings. And because we need to know how long it took us to generate the net income, the profit, we use the long form of the date that shows the entire accounting period. After all, $5,000 of profit for a year isn't too good if you're the business owner and living on the profit. But $5,000 profit in 1 month, so maybe $60,000 profit for a year, is doable. When we organize the income statement into revenue and expense sections, we're using a single-step format. But especially retailers and manufacturers find that reorganizing the revenues and expenses to reveal some important subtotals is useful. So here's a review of the multi-step format. Start with sales, subtract cost of goods sold expense to get gross profit, also called gross margin. This is one of the important subtotals. Then use an operating expense section for all of our remaining expenses except for interest expense, losses, and income tax expense. Gross profit minus total operating expenses gives us maybe the most important subtotal of all, operating income. Then we have a section for non-operating revenues and expenses, and a line for income tax expense and net income or net loss. Remember that whether we use a single-step or multi-step format, the income statement has all of our revenues and expenses for the accounting period, so both formats will still show the same net income or net loss at the bottom. Next, we'll review the balance sheet. The date is the short form, which shows a point in time, not a period of time. This is the statement that shows the accounting equation. Assets equal liabilities plus stockholders' equity. The simple form of the balance sheet just shows totals for each of the three sections and a combined total for liabilities and stockholders' equity. But if we're interested in a company's liquidity, the classified form of the balance sheet is useful. The classified balance sheet subdivides assets and liabilities into current and non-current groups. Current assets are assets that are currently cash or will turn into cash within a year, and prepaid expenses. Current liabilities are liabilities that will require payment with cash within a year and unearned revenues. Total current assets and total current liabilities are two of the most important subtotals for evaluating liquidity. For a more in-depth review of current and non-current assets and liabilities, use the classified balance sheet ACLET. This concludes the ACLET Financial Ratios Introduction.